The Dow Jones dropped 800 points yesterday. The S&P got to about 416. Things are looking pretty rough in the market, which begs the question, is this the time to actually sell, hold on to some cash, and get in when the market goes lower, if it will go lower? Justin, are you selling and are you thinking of getting some money out of the market?
Yesterday, I believe, Tom and I talked about having a very high cash allocation. We already are, but I would like that to be bigger. And I would like that to be bigger, that's what she said, because...
Whoa, Justin with the with the energy today.
I feel like Master Miyagi.
Okay. Let's hold our horses here. Let's hold our horses here. I'm still a professional. Okay, but I want a cash allocation, not because I'm scared and I want to like huddle up in my cave, but I think that there are a lot of prime opportunities that I can go buy pretty soon here. It smells pretty sweet. It smells like opportunity. It's starting to smell like opportunity. It's a little bit faint, and now it may not be the time, but when Google is trading for almost 15 times price to earnings, it starts smelling good. So I want cash. That's the end of it. I want cash to jump on it.
Tom, are you going to get out of the market?
No. In fact, I'm adding a new position.
Ooh. Did we get the reveal today?
I'll tell you which stock, but I don't hide things. It's a little stock called FCX. It's a copper play. Not the typical investment I usually do. I'll make a whole video on my channel explaining why. I think it's a very nice inflationary / EV bet. Phenomenal company. Down 20% over the past 5 days. I'm about to jump in at $40. So look, I agree with Justin. Look, you have to understand what's going on right now. So we got the Nasdaq giving up half of the post-COVID gains. Nasdaq is down 4% yesterday. Everybody's just screaming, everybody's gonna die, and they're running around in circles. Look, there's real problems in the global economy. There's honest supply chain issues. There's inflationary pressures, as Justin knows, because he's about to lose the bet of the 5.5 bet he did with me. But you have to remember, mainstream media and YouTube, including myself and this show, we do a lot of fear porn. That's how we get clicks. That's how we get views. This is how CNBC gets views. This is how everybody gets views. When things are bad, they make it seem much worse to get people to click. It's just the way it works. I don't think it's as bad as they make it seem. You also have to remember that you see a lot of these so-called experts on mainstream media talking about how bad things are going to become. You have to understand some of them may have shorted the market, which you don't know about. Some of them may be pushing gold, and that's kind of their agenda. Some of them want to sell books. There's a lot of people in the media with their own agenda. All I'm saying is just, it's nice to have cash on the side, especially in times like this, because there's really a lot of opportunities on the ground. I agree with Justin. It's starting to get interesting. But you shouldn't just sell everything and run away and hide in the cave. That's not what's going on here. Don't buy into the fear porn on mainstream media.
Yeah.
It's just bullshit.
Yep. And so I will be, just to clarify, I will be trying to take up for ROI Club members our cash allocation closer to 50%. But I actually see this opportunity as the possible beginning. What we were doing in a bull market is just buying here or there, crappy company, hypey company. And I wasn't immune to that, right? I mean, you kind of have to make money in a bull market.
Yep.
You got to kind of participate, right? But now is the time, in the bad times, that you can kind of trade and only buy into the companies with high quality and the ones that you really only want to buy for decades. So obviously Tesla is one of them, but there are many more.
There's many opportunities in the market. You mentioned Tesla at 900. It's an opportunity. The arbitrage gap for Twitter just widened to 10%. I don't know if you saw this. 10% for this deal is a really nice risk arb deal, in my opinion. It's even better than the 4% I said yesterday. I mean, even talking about the company I just mentioned, FCX, a $60 billion company with no short interest, like 1% short. It's a dividend company. And their free cash flow is just insane. Copper price is going up. There's a finite supply of copper in the world. It's 25 million tons per year. EVs alone are about to be 10% of that in a few years. Just looking at infrastructure and EVs, not to mention upgrades to local grids to support all these EVs. We're looking at like 25 million electric vehicles.
Tom, save some content for your channel, man.
Oh, trust me, I have a 15-minute video. It's ready. I just haven't published it yet. I'm just kind of sharing. Look, there are opportunities to make money in a bad market. you just have to be much more selective about it. It's not like shooting fish out of the barrel like was in post-COVID. It is what it is.
Yeah.